Jolly good morning to everybody. Thanks for joining us. And I'm thankful that you didn't choose the alternative, the football game which is out there. I'm sure how to say it will be more interesting and perhaps not as rough as a football game. That's the part of it. Thank you for joining here another bundle of central bank and the national banker here. It has become a tradition that the Austrian National Bank organizes a bundle which captures the interest not only of governors which are already part of the euro, but people who are already and still part of the outside. I think it's a critical part to bring everybody on board, and particularly at a time where central banking and the banking business, again, how to say, is getting a lot of limelight. And as part of the topic of Alpbach, recharging Europe, there are many areas there we can speak of. And so we had to be focused, and we decided to structure the panel in two parts. The first one is dealing with issues of monetary policy, and the second part is dealing with the financial markets, because it's often overlooked that central banks nowadays are not only responsible for price stability, but they're also responsible for financial market stability. And you would say, well, we can only count 4 governors here. We had announced 6. What has happened with both of them? And here I was very optimistic that finally, I was able to stage a panel with 3 females and 3 males. But unfortunately, health issues have struck our 2 females. They all deeply regret not being with us here, but they are not able to follow out directly from here, and they send the best regards and hope in the future time to be invited. So let me start then, before I go into the 2 parts of the panel, to present who is now with us here on the panel here. The first person is here is Irena Radovic, and she's the governor of Montenegro. This is a country some of you may have visited for vacations in southeastern Europe. Very nice coastline, interesting history there, and she has been governor since 23 and had other positions at the central bank in the private sector before. The second person I would like to welcome here at the panel. This is an old friend of mine, and we know each other for many, many years. I would say decades. Axel from Trotsenburg. He is the senior managing director at the World Bank. This sounds like, well, there's so many directors around. He is the number 2 at the World Bank. Not only, he's the number 2 at the World Bank, and had a long career at the World Bank only during my time. And when you're asking about the accent, he has both nationality, Austrian and Dutch, and so his accent is not easily identified there. And it's great to have him here. Thanks, Axel. And then, last but not least, it is Klaas, who was until recently my colleague at the central bank, European Central Bank in Frankfurt. He is now, after he had his limited part of being a governor of the Netherlands central banker, he is now not governor anymore, but from what his past experience, he has been and still is the most experienced central bankers in Europe. And I'm sure, how to say, he will stay in this business very long, because he has a knowledge there which is I always got, how to say, very jealous when I hear him because he has so much breadth behind it. So much for this panel here. And what are the kind of topics we have selected in order to move ahead? In the first round, dealing with monetary policy, originally we had foreseen 3 topics. As we have a smaller panel, we chose to do 2 with a lead speaker before we enter into that. And we decided to look very clearly into independence and into stablecoins. Both are topics which are very, very relevant for us now. It's very relevant for particular one country, the United States, but it's also relevant for other countries in the region which are not yet there, member of the European Central Bank system there. So, and here we will have then Irena coming out with her first statement there. And the other part, then we will talk, profitability would have one part of it, because there's always the issue, we make billions of losses there, how this is possible, and how we're still sitting here, shouldn't we work somewhere in order to reduce the losses? And would have been an interesting discussion to educate and to discuss it, but with regards to the urgency, we will look into stable coins, something which is often not differentiated from other elements there, like crypto assets, not cryptocurrencies. And it's important to understand, because this is a real threat for Europe, there's a real threat for the financial system, and though Klaas agreed how to say to the opening. So this is these 2 parts. Then we will, how to say, move on to a second part, which I will again introduce. And at the end, I hope we have enough time. I'll try to make sure that we can ask a question from the floor. With no further ado, I would like to ask now Irena to start out to talk about the importance of independency of a central bank, why it is important, and what are the critical issues there, in particular against your background in your country. Irena, you have the floor.
Thank you very much, Robert. First of all, I would like to say that it's really a privilege to be at the Alpbach Forum and to be in this inspirational environment. But also, it's a privilege to be at this panel, because I can say that Klaas Knot, with 14 years of being at the helm at the DNB, and Robert Holzmann, who has been probably the closest ally, not probably, for sure, the closest ally of the Montenegrin Central Bank since the period I am at the helm, is a good example of excellent cooperation, but also a privilege to be here with the people that are my role models, both in terms of integrity and professional capacity. I would also like to say that I'm a civil servant, so being at the helm of the National Development Bank and being at the central bank in 2 rounds is something that comes on top of other things that I worked in the public sector. But I'm very happy today in all these issues to bring the prospect of the enlargement countries, not only of Montenegro, but potentially wider, I mean Southeastern Europe and potentially even Eastern neighborhood. And I'm very glad that that can be the case. On the gender balance, I have to say that with the fact that out of 21 governors on the ECB Governing Council, there's not a single woman, it was very difficult. And I have to say, for the past 2 years, I was never, ever on a central bank balanced panel. So applause to Robert Holzmann for trying. But it will take some time until we reach that, because central banking still remains a very male-dominated segment. When it comes to central bank independence, the reason why Robert asked me is a number of challenges to be here and to talk on this issue is a number of challenges that we are facing as the Central Bank of Montenegro. But then again, you don't need to look into developing countries or accession countries. These days, we are talking about central banks as being very topical. We are looking at the most advanced economy. And if we look across the Atlantic, we can see moves and decisions that can cause outrage globally, and that can also jeopardize economies again globally, with effects that, well, and with the role of dollar in the global framework. the central banking independence goes, well, to the heart of central banking, because if we have a look at history, it teaches us that the actors change, but the consequences and the concepts don't. It's always, repercussions are always there in terms of repercussions of submissive policy of the central bank or central bank goals being subjected to short-term political interests result always in instability, in high inflation, in lost trust. And I have to say that I'm coming from a country which had a very notable episode which illustrates it very well. If we look at wars of former Yugoslavia and the period between 92 to 95, if you look at the period of 3 years where prices were doubling on average, where my parents who used to get their salaries and since the morning until the afternoon, until they would exchange the salary in the black market for German marks, we would be able to get food for 1 week and nothing more. So essentially this is an episode that we recall very vividly, and not only us. I mean, we had episodes across Europe. And I have to say that it is very relevant to make sure that the central bank independence remains intact. And I've mentioned the States, I've mentioned my own country, Montenegro, but we are seeing challenges across the EU also. Maybe they're not as visible and not as pronounced, but there are a number of EU member states where there are efforts to change the terms and make personal changes in terms of replacement of governors, in terms of shortening the central banking mandates to make them sort of more coincide with the political mandates. And there's very, very strong political incentive to control central banks. When it comes to Montenegro, I know that everybody knows, but I will still underline that we use the euro as a legal tender. From the time of hyperinflation and the time when Yugoslavia was dissolving through bloody wars, Montenegro decided at that stage, with assistance of democratic authorities both in the States and in Berlin and Frankfurt, to adopt the German mark as a legal tender. And since the 90s, we've been using the German mark, and then the very day when the euro was introduced in Germany, it was introduced in Montenegro. So we have this pretty unique experience of unilateral euroization, which means that the central bank does not have its own monetary policy. We import the ECB monetary policy, but then again, we are in charge of financial stability. So what does central bank independence regression mean in a central bank which is in charge of financial stability? I mean, I have witnessed, and not only myself, but also other colleagues across accession countries have witnessed attempts of governments and politicians interfering in governance of central banks, in supervisory decisions, in licensing decisions. It doesn't take much to figure out that when you have a euroized economy, that many non-European actors will wish to penetrate such market, especially in a country which is supposed to end accession negotiations in 26 and become a fully fledged member state in 28. So sometimes these foreign actors wish to finance political campaigns, wish to be very close to political actors, and the central bank has a responsibility to make sure that integrity of the financial market is protected. And it has to make sure not to license actors that shouldn't be licensed in European sphere. It has to make sure that there is strong AML-CFT enforcement. It needs to make sure that the banks operate on the same level playing field. And it needs to make sure that all the positions on populist reforms, which are more and more frequent across Europe, when central bank is asked, that the position which is delivered is a professional one. So I have to say that we ultimately, when we're talking about central bank independence, we come back to the credibility. Central bank, be it in terms of protection, against inflation, in terms of monetary policy efficiency and in terms of financial stability, cannot be credible and cannot achieve result and cannot have trust maintained unless it is independent.
Thanks a lot, Klaas. What are your thoughts, particularly against the background of your job you had at the Dutch Central Bank?
Well, there's basically one thing that Governor Radovic Irena already mentioned that I really want to reinforce here. I can well imagine that if you look at us from the audience, this is a group of central bankers arguing the case for central bank independence, that you may be led to think that this is by and large a little bit of a self-serving argument that sort of we don't want to be accountable, we want to do our thing and leave us alone. Well, that's a mistake. Central bank independence is not there for us, it's there for you. And that can be illustrated, for instance, also if you compare the cost of disinflation in the two episodes with sky-high inflation that I have faced in my life, the high inflation of the 1970s versus the high inflation of the 2020s. In both cases, it started with a negative supply shock, oil in the 70s, gas in the 2020s. In the 1970s, there was no central bank independence. The pictures of President Nixon bullying Federal Reserve Chairman Arthur Burns into lowering interest rates while inflation was going up. There's nothing new under the sun, I would say. These pictures were all over the place in markets. Inflation expectations were drifting away from the central bank targets. There was no explicit 2% target, but there was a sort of implicit understanding that price stability was around 2%, and that would be targeted by the central bank. Inflation expectations were completely unanchored. Everybody was expecting high inflation, so high inflation got embedded in the economy, and it took Paul Volcker, with a shock therapy, a very painful episode of double-digit unemployment, creating so much slack in the labor market that trade unions gave up on sort of wanting to be compensated for the loss in purchasing power. The deepest recession, I think, 1981, 1983, for many of us in our lives, to finally get inflation back to sort of acceptable low numbers, close to 2%. If you compare that to the 2020s, where there was central bank independence, where inflation again went up sky high, 10.6%, I believe, was the peak in the euro area. But we monitor inflation expectations when we are at the Frankfurt meeting table every 6 weeks. And inflation expectations never went beyond, well, there are various measures of inflation expectations, but for instance, the market-based measures of inflation expectation, the famous 5-year, it never went beyond 2.6% in all that episode. So while actual inflation was running at more than 10%, inflation expectations remained pretty close to our 2% target. And that made the disinflation process back from 10% to today's roughly 2% much less painful. We basically disinflated without any run-up in unemployment. We disinflated at full employment. And that is the difference that central bank independence can make. Credibility of disinflation policies, anchoring of inflation expectations, and therefore much lower costs to society for us to enable to fulfill our mandate.
Thanks a lot. I think this was a very important addition there that shows that independence of central banks really matters. And before I hand over then the colleagues from the World Bank, a little bit information about the econometric work which exists in these areas with regards to different countries worldwide, etc. And it's unanimously emerging that the independence of central bank is important for not only the inflation, but through the inflation path for productivity. And all the recent studies I've seen that independence of central banks is or among the key elements there of prosperity. At least that's my reading, but Axel did his PhD in monetary policy, and they followed it clearly there. Is it also your experience from the World Bank, which also has been involved in building up of central bank independence?
So I'm the only one who's not from the central bank. But let me first start by congratulating both Robert and Klaas for extremely successful tenures as central bank presidents. What is important is not to throw flowers to you, but basically what you were talking about is it's about the credibility issue. It is about articulating why this matters. And I think that is more needed than ever. When we at the bank, we are not dealing with the Eurozone or with US monetary policy, but we are dealing with developing countries. And what you are seeing, of course, when Klaas explains what the experience of the recent past, that to get inflation down, is that there is credibility and expectations. The problem what we are having seen is we take this now for granted. It's almost complacency, it will work out. When we at the World Bank are working with developing countries, you see the awful experience of high inflation. And where you then see that governments are not controlling anymore monetary policy, it is dictated by politicians. And it has had awful experiences, having lived for a long time also in Latin America, you see there these experiences. So what is very important is that sometimes when things work, people think they take it for granted. The issue is that it cannot be taken for granted, because what we are seeing also in the geopolitical world today, that there are even questions within the OECD about central bank independence. And so it's a very fragile good that actually needs to be defended every day. So there is a challenge, what we're seeing on geopolitics. Then I would say also the issue about global supply chains have been breaking down and has huge implications that don't stop only in the real world, but also go into the monetary area. And then I would say what's happening on the fiscal side. Because of course, central banks can do as much as they can, but they are not completely independent. What you're seeing in developing countries, the source of inflation very often is unsustainable fiscal deficits. And that means that it is not financed, or there is excessive debt. And here I think one needs to be very careful, and I think that there was a reason to have the Maastricht criterion on debt levels, that actually in the long run that needs to be looked at. Therefore, I think one needs to see how you manage the short term with the longer term, longer implications of the debt issue. Now, not everything can't be taken for independence is then say, well, don't get intervening in what we are doing, central banks. I think central banks are in the public domain. So there are a couple of challenges I think one needs to look at. First, it comes back to credibility. How do you communicate credibility? I mean, the communiques, either the Fed or the ECB issues, is not read by, Joe on the street. So one of the things is, how do you actually explain difficult systems in a way that people understand? It's very difficult. But I think we need to think about this very carefully, because the narrative is then in a world where sometimes in populism is that you simplify it to such an extent that you can no longer make a good argument. So therefore we need to think very much how credibility is linked to a credible and effective narrative and communication. The second thing is the whole framework of monetary policy on price stability is one. But we need to also see the two other aspects that are important. In the case of the US Fed, they have essentially two objectives: is price stability and employment. That is not necessarily ECB, but that is one debate, how you are dealing with these two objectives. And then the other debate, what we have seen over the last couple of years, is the longer terms, is the climate and the resilience topic, how you integrate it. So I think central bank independence should not be constructed as a static concept that, okay, price stability, that's it, we don't need. It needs to convey also a dynamic element, how maybe longer term trends, be it in employment, but also you mentioned productivity, and then climate resilience can be effectively incorporated within the whole policy framework. And I think that requires the internal discussion among the central banks, but equally the debate in the larger public.
Thanks a lot. I mean, I think that last part you put on the table would, of course, be a pleasure for many of you here to discuss the role of central banks with regard to the greening of the earth. We don't do that because otherwise we will be here in the evening. So let's move it off. But what I think an important part as a kind of communication would be is, yes, we're independent, but how to say we're still accountable. And this is something which needs to be understood. So we don't sit there and say, forget about it, you can't do anything to us. Each of us goes out and talks to the parliament, or at least sessions of the parliament subcommittees, in order to be questioned what we are doing. I have to say, in the Austrian parliament, it was always more, how to say, cordial discussion, but I would like to ask Klaas, who had more, how to say, dramatic discussions at your parliament, as further understood it for some of this issue there. So how often did you show up and what are the topics there? Just to understand, you went out there, what were you doing there? So what was the parliament asking you there when you went to the parliament and explained the central bank policy there? And then also you, thank you.
Well, I mean, most of the time that I was asked to come to Parliament, this was about financial stability. Because clearly the 2008-2009 crisis hit the Netherlands quite hard. And it was also a rough wake-up call, because the expectation in my country had been that banking crisis, that was not something for us. I mean, that was something for different parts of the world. Well, it appeared to be something for us. And therefore, Parliament wanted to have a much tighter grip on sort of what we were doing to preserve financial stability. And every year, with a regular cycle, they invited me to talk about my view on how I saw financial stability in the Netherlands, in the euro area, and even worldwide. When I was asked to come for monetary policy, that was much less frequent, because I do think in Dutch Parliament there is respect for central bank independence, and so Parliament didn't want to be seen as overly on my neck, if I may say so, on monetary policy. But there were a few instances, and most of these instances had to do with the activation of unconventional monetary policy. That sort of, they wanted to understand a bit more what was unconventional monetary policy, and whether it was really, truly only lowering interest rates through a different mechanism than lowering interest rates through lowering the deposit facility rate, etc. And that discussion became a little bit more controversial when, of course, the issue of central bank losses popped up. Because if you take a purist approach, let me start with the purist approach, central bank losses should not matter for monetary policy makers, because we have a mandate that is not formulated in terms of our own P&L. We have a mandate that is formulated in terms of delivering 2% inflation, and if it's needed to incur losses for the mandate, well, too bad. That's the purist approach. Now, I personally am skeptical about this purist approach, and the reason is we're not living in a perfect world where everybody understands perfectly what we are doing, what are the risks and what are the benefits, etc. And I would posit that 99% of our population, and that also goes for a large part of parliamentarians, they don't really understand monetary policy, but they trust us. They trust us doing a job, and as long as they see us delivering on our mandate, it's okay. But 98-99% of the population and all parliamentarians do understand the concept of gains and losses. And if you've told them for a while that unconventional policy is only lowering interest rates through a different mechanism, and then all of a sudden you have to show up and tell them, hey guys, unfortunately until 2032 there will be no profit distribution from the central bank, because we have big losses that we need to restock our reserves with, and therefore for the next, 12 years or so, taxes will have to be a little bit higher to compensate for this fiscal shortfall. That is what people do understand. And actually, so it does dent your credibility in a non-rational way, unfortunately, but we have to live with the world as is, not as we like it to be. So that's why I do think we should not do lightly, talk lightly about central bank losses. At the end of the day, it's not our primary objective, so we always have to keep in mind that inflation is our primary objective. But the issue of proportionality is crucially important here, that we always have to try to find the way in which we achieve our objective while minimizing side effects and risks, etc. And that is also central, that has also been central in the reformulation of the monetary policy strategy that the ECB has done first in 2020 and that has been renewed only a few months ago. That this concept of proportionality, that be very, very critical on how can you achieve your objectives while minimizing side effects. And that is something where I still think a lot of additional explanation is needed. But then again, I don't think we can ever fully explain and convince parliamentarians of this. It's a fact of life.
Thanks a lot. Yeah, I would like to get your input, how you are acting as a central bank, your independence with regard to the public or the parliament.
First of all, you mentioned, thank you, Robert, you mentioned accountability and you mentioned parliament. What we are trying to do is to reinforce our accountability to general public, and we are trying to reach out to general public through social networks, through many interactions, through debates with various target groups. And I have to say that we made a significant improvement from being a very closed and conservative institution, which is traditionally the perception of a central bank. We've opened the central bank in Montenegro, and today we are communicating very openly, and we are replying to questions of citizens on a daily basis and providing services that we were not providing before. When it comes to accountability to the parliament, to political elites, I have to say that it is always challenging because I believe that the role of central banks is not fully understood, and it's really difficult, especially to explain what the role of central bank in a euroized economy is. So I will make you laugh maybe, but when I go to the parliament, and I go to the parliament very often because central bank is contributing in 9 negotiation chapters, so we are adopting law in a sort of speed machine, there's not a month that I'm not in the parliament. And normally, when I say I will make you laugh, the 2 questions that I get from parliamentarians who want to sort of denigrate the role of the central bank is, one, how high is your salary, and why is your salary 2.5 times higher than that of a prime minister or president? And second, why are interest rates high? And you know, if you have, it's a legitimate question. It's a question in a country where the deposit rate is 0.24%, and the lending rate for newly approved loans is 6.59, where you have this huge spread. Then it is legitimate. It is a question for the agency for competition, not for the central bank, because in a euroized economy, the central bank does not have instruments to influence the interest rates. So normally the reply to parliamentarians is to conduct the reforms, to decrease the risk premium, to improve the credit rating of Montenegro. And when I talk to my Croatian colleague, Croatian governor, and when I ask what their experience is, he says, until we joined the EU, we had pretty much the same huge spread and the same questions and same issues with parliamentarians. When we're talking about remunerations, in central bank, they are, I should say, very modest, but still quite higher than in the government. But then again, on average, the central bank governor remuneration is on average 10 times lower than that of the chairman of any European bank functioning in Montenegro. So you always try to explain, if you are supervising an industry, and if you wish to retain the highest caliber of professionals in the central bank, you need to reward them accordingly. So again, when we're talking about central bank independence, let's say in view of tendencies of trying to install political appointees with maybe question marks on capacity, sometimes question marks on integrity, the key issue across accession countries is actually to make sure that there is adherence to the rule of law. And this is the basic question of all questions, because in all of our central bank laws, there are safeguards that don't exist in the in predominant part of the major central banks in the European Union. And these are very strong safeguards which say governor proposes vice governors who cannot be members of political parties. They need to have minimum 10 years of professional experience, so on and so forth. And political elites tend to believe that this is not the recipe, and what is in the law does not have to be in de facto implementation. So this is a challenge, but I believe that in terms of EU accession and in terms of central bank independence being a closing benchmark in two important chapters, that there is a role for Brussels, there is a role for the ECB, and clearly there is significant assistance and underpinning by the Eurosystem central banks, both National Bank of Austria and the Dutch central bank, who have played a very, very important role in both.
Thanks a lot. Thanks. I mean, we could talk the whole time about this topic. We have to move on. Just to let you know, a major part of also of our communication, as it was mentioned, is not only, of course, towards the sovereign, the parliament, but also the public. So what you did, what I did, coming back from Frankfurt, was, how to say, on the next day, in order to, how to say, also have a communication what has been decided and why it was decided. It's a major part of it, which is also, you're independent, but you still have to explain, so to bring the others along in order to make it happen. So,
Robert, if I may just add one thing, unlike what Klaas mentioned, we recently, well, only 3 years ago, had 2 failed banks. And our general public understands much better, because in Montenegro the deposits are protected at the level of 50,000 euros, not 100,000 euros like in the European Union. So many still did not recover the deposits, and many in general public understand how important it is to have strong and robust supervision, strong regulatory framework, and alignment with the EU are key as soon as possible, not only in terms of paper, but also in terms of implementation.
Okay, thanks a lot for the addition there. So this moves us now to the second topic on monetary policy. Something, again, we would be able to spend not only this session, but a whole day or two in order to penetrate, is the issue of stable coins. What are they? And why are they threatening, if we don't act, our sovereignty in Europe? And for this reason, why we have to do something about it. Klaas, please.
Yeah, thank you very much, Robert. I think this is an area where there is a lot of anxiety in society. There's also still a lot of misunderstandings about what crypto assets, what stable coins exactly are, etc. But I do believe it's a very, very relevant topic from the perspective of financial stability that we should monitor quite closely. First, briefly, before I go into stablecoins, there is a distinction between traditional crypto assets, like Bitcoin, for instance, and stablecoins, like Tether. Bitcoins are simply very speculative assets, and what we, from the FSB side, the Financial Stability Board side, have tried to do is come forward with a global regulatory framework where, in essence, we try to create the same level of investor protection around crypto assets than is the case around traditional risky investment products. So these have to do with transparency around the risks, separation of funds, a proper governance, and what have you. And when it comes to the perspective of financial stability, normally speculative assets should not have an awful lot of potential to turn into a financial stability risk unless they are combined with leverage. So unless people are really heavily borrowing in order to make speculative investments, and if they then lose money, of course, they cannot pay back their loans, and then you have the cascading through the financial system that might create a financial stability event. But this is the crypto asset, the easy side, I would say. The more complicated side is the stablecoin side. And what's a stablecoin? A stablecoin is essentially a crypto asset that is backed by credible risk-free assets and a promise that it can always be redeemed, therefore, in terms of these assets. So most stablecoins 99% or so are US dollar based. What does it mean? If you own a stable coin, you can always exchange it back into a US dollar because the issuer of the stable coin has this pool of assets, mostly US treasuries, which are seen to be risk-free, which can be liquidated any moment. So it has the pretense of stability and predictability. The problem, of course, is how strong is this coping mechanism? And how sure can you be that these assets are really there and that these are really risk-free? Because there is no full transparency around these sort of asset pools. Are they really risk-free? And what happens if there is a liquidity event in the treasury market? That might give rise to a run on the stable. Then the underlying assets will have to be liquidated, but in a market where there was already a liquidity crisis, so they may have to be liquidated at a loss. So you could say that stablecoins have a huge risk of undermining the singleness of money, that a dollar is not always a dollar, and that a dollar in a stablecoin is not worth the same dollar than the dollar in your wallet when it is in cash or when it is in your traditional bank account as a deposit. And what is particularly risky in my view is that if stable coins become huge investors in government debt, then the governments, of course, have a conflict of interest. Because on the one hand, their task is to regulate these entities, but on the other hand, the financing of their own deficits and their own debt becomes increasingly dependent on the willingness of the stablecoin issuers to continue to invest in their debt. And that sort of doesn't feel good from a governance perspective. And the risk, of course, is that weakly sort of regulated stablecoins will be seen primarily by the government as a vehicle to cheaply finance its debt. And if these stablecoins are then aimed to sort of be issued in countries outside the issuer of the debt, i.e. the emerging market world, where of course the potential for new payment instruments that are more stable than their own domestic currency, Zimbabwe, Argentina, Turkey, think about the countries where the own currency has not really been stable recently, then the instability is easily transmitted to other countries. And these countries, importantly also, they lose control over their own money supply. And losing control over your own money supply means you can't conduct your own monetary policy anymore because your financial conditions, your financing conditions are not under your own control, but are partly determined by this outside stable coin. That is a risk that I think is at this moment quite relevant. It can only be solved by close international cooperation, but that requires a cooperative attitude on each side of the table, and that, of course, is a little bit more difficult with the let's say the questions that are being raised about multilateralism, about acceptance, the position that particularly the US is taking in these discussions.
Okay, thanks a lot. Was great class, but I assume, how to say, most of the people there will now ask, okay, what can you do with it? I would like to translate what you have said in my simple words there. Why have stable coins the way we currently are been created? Because many of us had to do with funny money, you know, so you buy a restaurant account for somebody and can use then this money, what he has, it's to buy a special service. The reason why these stable coins have been created, this is the way how you're able to buy crypto assets, so bitcoins. Yeah. You cannot simply go to your bank and say, I want to buy crypto. I would say, you have to have stable coins in order to buy bitcoins there. So this was the beginning of it, out of it. But of course, once it's there, the question then is another use. And this is where it becomes very important for the strategic directions of Europe, is that the stable coins are used in dollar in order to transfer money much more easily than through the banking system from Colombia to what is it, Albania, which has not the euro. By chance I mentioned this one, there's no background behind it. And this is something which, how to say, makes these stable coins very interesting for a large populace that wants to have a quick transfer in something which otherwise, if you transfer a dollar, is much more complicated. And at the moment, the amount of stable coins in dollars is about 100 times larger than the amount of stable coins in euros, which means, how to say, there's a lot of money there, which, how to say, takes over the typical central bank or private bank money what we have in euro there. So if this becomes so large and we have none of it, then we have a problem. So on the one hand, we get a problem through the financial system and what may happen there. The other problem is that we as the euro, have a competitor which we also have, how to say, to find stable coins which are in euro in a special way there. So this is an additional part of it. It's important for our sovereignty, because otherwise the dollar becomes even more important, and finances in addition the budget of in the US. So as an additional explanation to that. And now the question is, do you want now to talk about stablecoins from the World Bank?
I just want to say, look, we always need to go back to basics. And I mentioned about communications. Most people don't understand the system.
Yeah.
And we need to keep in mind that the financial system is a precious system that relies on credibility and trust. And so this is something that is taken for granted, can be destroyed very quickly. And so we need, when we have financial innovation coming, we need always to keep in mind which problem are we trying to solve right now. And is it well understood? Because you were talking about some developing country using this. Well, maybe there are capital controls there. And so we need also to say the regulatory framework will be essential on this. It will be also essential, is this going to be a device to finance deficits or the debts of countries? And what are the ultimate implications for the whole world on this? And I think we need to call a spade, have this analyzed, and then be clear, do we have then an international regulatory framework that is credible and it is understandable? And I think that is because when you are talking about what is happening right now with payment systems, and so in Europe, or all the things between the OECD, that's pretty fast. I mean, living in the US, it goes like this. There is no problem on this. So basically, we need also to see what are we trying to solve, and what are the priorities you want? Is this the first priority versus, for example, the capital union? Or this is some of the areas where I think a lot more work needs to be done, particularly when you're talking about stable coins and cryptocurrencies. And cryptocurrencies, unfortunately, have, of course, a lot of issues. And that cannot be equated, but people think that it is almost the same. And so we need to be very clear what we are trying to solve. So what we are favoring is that actually one goes in a very deliberate and international coordinated way that cannot be just one and the rest. And so you will need to have that. And I think we need always to keep in mind that people trust the system. And I would be very careful about ever to start scratching on this.
Okay, thanks, sir. We have already spent an hour now. I give you for 5 sentences.
Thank you. I will take longer than 5 sentences. And if need be, I will pledge my right on gender grounds. I have to say that I disagree. I think that, not in entirety, but I think that we need to look into not only risks, which were very well elaborated by all other panelists, but we also need to look at the other side. We need to look at reality. When I say I disagree, I'm not disagreeing out of belief. I'm disagreeing out of the mere fact that cryptocurrencies and stablecoins are reality, which are not going to go away. And the longer we try to deny this reality as central bank and the longer we fight it, the further away we are going to stay, and that is not the goal. The goal is to be reactive, to be innovative, and to actually secure your own jurisdictions and secure Europe. So I believe that we are not talking about crypto-friendly governments across the Atlantic and globally. We are talking about crypto-friendly governments in Europe. And sometimes we are talking also about crypto-friendly governors, let's not forget, in the Euro system. So we need to be bold, and we need to think of what we can do and how we do it. And I agree with Axel that international cooperation is absolutely indispensable, but we've seen what the Europe did already in terms of regulatory framework. It did try with MiCA. It has deficiencies, but it's a start. We know how what's the backing and how the supervision is supposed to work. On digital euro, there is clearly a recognition that it needs to come into force as soon as possible and why it is relevant. On international cooperation, again, there are elements which need to be put in place, but I would be much more in favor of the ECB and the central banks of the euro system, all the central banks in Europe, trying to find a way to make sure that our commercial banks issue stable coins back to the euro, and to also make sure that we explain to the general public and to explain to everyone why digital euro is so important, and to also talk to our commercial banks and also bring them to a ground where we can actually advocate the position that it will be a project which will not be only turned on to them, which will be a shared responsibility for all of us, and which is very, very relevant for strategic autonomy of the European Union. When it comes to Montenegro, as a Euroized economy which doesn't have access to the European infrastructure, we're running a very high risk of currency substitution. We do have quite a lot of crypto-friendly political actors. It is something which is present all over, it's overwhelmingly so, and that is why I believe that when we are talking about wake-up call, it is really time to wake up and not talk only about risks. It's time to talk about opportunities and seizing these opportunities. Thank you.
Okay, thanks. I think it's an important addition to that, and particularly your country and others of the Balkan countries being linked to a cheap payment system is of crucial importance. And when you come from a country where you had been blessed by the IBAN system for many decades now, you take it for given. And then, how to say, when you talk to countries like Montenegro and others, where the payment, the transfer of money, you want to buy something, you receive money, and then you have costs coming in the high percentage rates there, then of course it makes commerce and production much cheaper, much more expensive out of it. So,
well, I will add one more thing on that, Robert. The average price of transaction in Montenegro in the SEPA area in 2024 was 74 euros. So this was what the banks were charging. Average cost of transaction, 74 euros. Why would somebody give 74 euros for average transaction to a bank? And why, if you're trying to transfer 1,000 euros, you need to pay between 100 and 120 euros to a bank? Why wouldn't you use cryptocurrencies?
Exactly.
You would. So what we are doing is aligning with the EU infrastructure, yes, reducing costs of operations and EU infrastructure at the same time, not getting anything for free, it's not charity, expanding the base for European Union, but at the same time trying to protect our jurisdictions, because I can do as much as I can, and we did a lot on integrity of our financial market via banking system, but there's very little that you can do via cryptocurrencies channel.
I just want to say that the fact that traditional cross-border payments between, let's say, countries outside the OECD space are excessively expensive, that is absolutely true. It's a big, big scandal. It's a big, big scandal what is being charged if you want to transfer money through the traditional payment system from one, let's say, emerging country to another one. So that is also something that within the FSB we have recognized and that we are addressing. So there is the cross-border payments roadmap where at the G20 level it has been decided that we put a cap on the maximum amount of money that banks are allowed to charge for any cross-border payment, be it between Africa, one African country and a South American country, or whatever you have. So caps, both in terms of the amount of time that it can take before the money gets transferred, the amount of money that can be charged, and those who have access to these payments. Because I do agree with Robert's analysis and also with Irena's analysis that this is the heart of why stablecoins have become so popular. So in addition to being aware of the risk of stablecoins, obviously we need to also address the root cause, and we are addressing the root cause. But then again, what is the reason why these transfers are so expensive? It's because of anti-money laundering checks. Because there is, unfortunately, a lot of black money making its way through the payment system, and banks are charged with sort of the duty to do these AML checks on customers that are hard to identify, that may have sketchy backgrounds and what have you. And if the competitive edge of crypto is that there are no effective AML CFT checks and controls in place, that is also not a very good outcome. So the FATF is, of course, trying to work on a system where the level of AML resilience should be equal across every payment alternative that citizens have from every part of the world. But here the reality is probably that we know from, let's say, criminal authorities, etc., that unfortunately crypto assets and stablecoins are being used big time for money laundering and illicit activities. And that is still, I think, also an unresolved problem.
And can I just add one footnote? We should not only looking at the financial advantages or disadvantages. If you look at the proposal under the so-called big, beautiful bill in the United States, the House of Representatives introduced a tax on international transfers. This was ultimately watered down. But so you need to look not only from the financial, but then is also what is happening, namely in the fiscal. And the perverse part of it is that there, under the House of Representatives proposal, that was taxing the official transfers. And then you get into, namely, how you do that with cryptocurrency, then you actually increase AML concerns. So I think one needs to see this as a whole system and not that there is only a financial, there is also another fiscal and political aspect on this.
No, a very important point. I let flow this discussion longer then, and so as always, then you have to cut somewhere, like in the budget. I will do it now, or I take out the savings and investment union, because this would take quite likely a full day, 2 days, 3 days, in order to discuss it in depth. We move immediately, I would suggest, to the simplification, because it builds well on the topic there. Simplification of the rules, which should, on the one hand, contribute to financial stability, but on the other hand, there are major concerns for the banking system because it grows and grows and grows there, and following each of these rules becomes more and more difficult and also more and more costly. And on this, then Klaas, if you could also come in, since as a member of many of these institutions, you have been at the forefront of the discussion of simplification. What does it mean? What could be done? What are the limits? There, please.
Yeah. I'll try to be brief, but the reason why I think there's a lot of concern among the financial industry about the burden of regulation and the administrative burdens, and why there is this strong call for simplification is, of course, that since the global financial crisis, regulation in the first place of the banking sector has been strengthened quite a bit. And that was absolutely necessary. I mean, the cost of financial crisis, we were reminded, is really a multiple of the cost of any form of financial regulation. And that re-regulating the banking industry, I think, successfully transformed the banking industry from a shock amplifier during the global financial crisis to a shock absorber that we've seen over the last 5 years in all the shocks that we did face. There were financial shocks, but all these shocks were contained to the non-bank space. So now also within the context of the financial stability work in the last couple of years, we've been working quite hard to also bring the level of resilience in NBFI up to standard, to a similar level of resilience that has been achieved there in the banking side. Now, does that mean that all is well? And that is not, I think, a fair assessment to make, because if you have very strong growth in one area for year after year after year, for sure there are also some areas where maybe we overdid it a little bit. So the fact that there is now calls for having a bit of a review of the entirety of financial regulation on banks, on insurance companies, on non-banks, etc., I think it's a fair request to make. But I would caution that as long as the objective is simplification, I'm okay with it, but don't let it morph into deregulation, because we really don't want to go back to the dark days of 2008, 2009. Now, then let me end. Where do I see some potential for, let's say, simplification? I think in reporting burdens, I think there is space for simplification. I think we could have a cleaner break between supervision and resolution, particularly when it comes to the capital stack, which has become quite complicated. In Europe, unfortunately, we have a system of level 1, level 2, level 3, where level 1 is the government, level 2 is the banking authority and the insurance authority, and then level 3 is the supervisor. And there are all kinds of political deals being struck at level 1, so level 1 is unclear. Multiple countries can read multiple things into it, and that's a little bit the purpose, because that's the way you reach a compromise. But then level 2 starts reinterpreting what was the decision at level 1. They add additional layers of requirements, and then level 3 thinks, oh, we can't work with this stuff, we have to do the supervision on the ground, so we issue our own policy guidance on top of that. And I think if you look at that entire building, there is a lot of overlap, and there inevitably must be some sort of dead wood that can be cut there. And let me finish with one area where I really do think that a sort of parallel universe has been created, and that is everything around the use of internal models. I don't think internal models play an important role in the way how a financial firm is managed. It plays a role how they manage their relationship with the supervisor and how they manage down the capital requirement. But in the supervisory agency, it also doesn't really play a role when it comes to the big sort of once a year conversation at what keeps you awake at night that a supervisor has with a financial institution. There also the models seldomly play a role. And I think there are big investments both on the financial industry as well as on the supervisory side. Also there, it's not a popular argument, and also the financial industry doesn't want to go there because they like the capital reduction that it delivers. But you can ask yourself, really, is this efficient and effective from a resource perspective?
Thanks, sir. And in order to, was very important as addition, but in order to give you a magnitude, what it means with regard to the size of regulation, and Klaas, you correct me, approximately, Basel I had, I think, 600 pages, Basel II had 6,000 pages, and Basel III had 60,000 pages. So just to give you a feeling of the magnitude we are talking about, and 60,000 pages to know, to make them consistent and to implement is, of course, a task which would be a possibility to all the, classic heroes in order to make it happen. So the question is, how to deal with it, how to say to make it effective in anti-money laundering, but also to the many other issues which are there. It's simply how to say, yes, we would like to be effective with regard to regulation, but and then I hand over to you, Axel. You have been optimistic, that it's so easy to harmonize. It's easy, I interpret it, easy to harmonize environmental concerns with financial banker supervision there. And given, how to say that even without the environment it's difficult, in addition then, how to say, to supervise financial institution and to do the good thing when they put money on the table with regard to investment is an additional burden which is outside this one. So where is the optimism coming from? I'm now a little bit challenging you.
Well, I think optimism. I think you need always to look where we are looking at. Can we mobilize more resources? But what I have been noticing is people are checking out. In the case of when we transformed this model for the poorest country, either the International Development Bank, and went to capital markets, and then you have to see who's sitting around the table. There are finance ministries, there are foreign ministries. And then silence comes. Now, you could interpret silence that people are agreeing with you. No, they don't. The only thing that maybe somebody from a foreign ministry can say, I need more information. Basically, I have no clue what's going on. So the problem of it is we need to simplify, but we need also to be reliable, because basically governments are on the hook. And if something goes wrong, they have to pay for that. And so one of the things is we need to see how we can actually simplify, but also create enough comfort on this. We have been doing, in this case, when it got into going into bond markets, that you go to G7 finance ministries or in Sweden or in Holland and have them look at it and then issue an opinion, because it is actually complicated. It's getting complicated on this. Now, you will say you will need to simplify it. You need to take simplification against optimization of resources, because what you can do with systems, you can also optimize mobilization of resources. So just to simplify for the sake of thing is, you get then into system $1 in, $1 out, but you can actually leverage. So you need to look at this far more. What I think is, like in the European Union, the question is, do you need all these systems in parallel? Like when you look at the capital or the banking union, there is a vast area of unification possible. I also think, like in the multilateral development world, with all these MDBs, there is a question, why would you need to have all these different systems? People are checking out, and then there is a risk. And so I think there are those possibilities, and then it depends largely on the political will. You started on that, Klaas. I mean, if you want to make progress, you will need to start with the political will that you take those principal positions. Because quite frankly, what I've also seen in the World Bank, but also efforts, if there is that mandate to simplify it, I can tell you, anybody can come in this international world with a good set of proposals. And if they were to say, can you reduce the 60,000 pages to 2,000, I bet you can. And so you need that political statement. Are you willing to do that, yes or no? And I think that is where we need to go, because what I see also for international institutions, it starts affecting your authorizing environment and your long-term credibility. Because then they say that is a game designed to confuse, and people have no longer comfort. So I think one goes also in the other extreme. So the simplification agenda is going to be extremely important also for political legitimacy. And I think there one will need to have far greater mandates, and also greater ambition. Because if you leave it to the technicians, it won't happen.
Okay, thanks a lot. I think that's an important point. Irena now is a relatively small country with the 60,000, and to make sure that you have the anti-laundering, monitoring, and the stability parts all in your hand. How are you dealing with it? How are you handling that? It's difficult for a big country, but for a smaller country, it must be a real challenge.
Thank you very much, Robert. I fully agree, and I'm experiencing it on a daily basis. When you're an accession country, you need to run at the same pace like your EU peers when you're adopting regulation, because for the Commission to assess it, it takes several months, and you cannot close your chapters unless you are sometimes even faster than your EU colleagues. So yes, there is a lot, and yes, in small jurisdictions where banks are small, where capacities are limited, this is quite a significant stretch. And very particularly in terms of sometimes adopting and applying regulations which cannot be applied because jurisdiction is small and the players are too small. So I don't think that this is a problem only for Montenegro. I believe this is also a problem for Austria. I think this is a problem for a majority of states because overburdening and complex regulation is actually a challenge for smaller jurisdictions and smaller firms much more than the ones for whom this was initially put in place. I believe that for us as an accession country, simplification, as Klaas likes to say, not equaling deregulation, but smarter regulation, in terms of securing proportionality, consistency, and predictability is really the recipe that we need to employ, because if we continue producing and burdening our companies and our regulators on a daily basis with more and more complex regulation, we are going to just increase the costs of operations on all fronts, and we are going to make our companies inefficient. And I believe that, well, the steps which are being taken are probably going to contribute in this direction, but at the same time, in view of global changes and in view of positions which are being shaped more and more vocally, we will need to be again much faster and much stronger in delivery.
Thanks a lot. Thank you. I just looked at the watch, and I have to say, I promised 20 minutes for discussion. It's only 7 minutes left. So sorry for that. Sorry for that. I thought we have half an hour, as I was thinking about it. I was wrong for this one, but if you're not able to answer all of the questions, I would like to hear them. So what are the kind of questions for the audience now? How to say, so please, at least 3 questions. We won't be able to answer them in the detail there, but I would like to know, after you've heard, I'm afraid it was often quite technical, to a way which, if you're not in monetary policy, neither in the monetary policy nor in the supervision, it becomes a difficult. So please, who still has the stomach to ask a question? Yes, please. Great, thank you. Microphone over there, please. Thank you. Always stand up and put your name and affiliation. Thanks a lot.
My name is Mark Koy. I'm from the Netherlands. I'm a legislative lawyer for the Ministry of Justice. I was wondering, what do you think of the developments in the private debt sector and, well, connecting that to the Basel agreements?
Yeah. Oh, well, a very simple, non-technical question. Thanks a lot. Another question there, which... no, okay, I think... It's something then for the specialist.
So you will get the impression that I'm somebody who always worries about everything, because this question again forces me to say, well, it's an area for concern. Why? So we strengthened banking regulation very much, and then you always have a little bit of a waterbed effect. If you strengthen regulation in one part of the financial system, then some of the activities migrate to other parts of the financial system. Well, that's the case with private credit. That credit origination outside the banking sector has really grown quite a bit. And of course, that all is well as long as we don't have a major economic recession and credit quality continues to be fine, etc. But to be fair, we've never had a serious economic downturn during the period in which we had this significant growth in private credit. And when you have an economic downturn and credit quality deteriorates, within the banking sector at least there is experience with sort of credits deteriorating. There are workout procedures. There are specific departments within the bank that deal with sort of problematic credits, etc., etc. Probably there's none of this infrastructure that I'm aware of in the main providers of private credit. And the danger then is the issue of procyclicality, that once there would be some form of downturn in credit quality, that all of a sudden private financiers want to get out of this business because they want to cut their losses and they don't have efficient procedures to deal with it. Is there enough capital in the non-bank system to deal with these losses? Highly questionable. So yes, there is an issue with procyclicality that I think isn't, we haven't seen it yet because we have no experience with a downturn with such huge exposures in the non-bank world.
Thanks a lot. I think that's a critical question, which again would require a whole separate session. This is essentially, as you put it well, the waterbed effect. We have an incredible growth in private credit. We don't know often what the background is. Is it an ALM problem? Is it something which simply escaping, how to say, the burden of reporting, etc.? And as we've seen in other areas, if something builds up, it's possible that it comes down again with major stability effects there. And we are all struggling, I'm sure also the World Bank and the smaller and larger countries, how to say, to come to grasp. It's not, how to say, we like the dynamism behind it, but if you have a dynamism, you have to make sure the stability is over there, because otherwise you will regret it, and we have seen this in recent decades very often. 1 minute, and then we finish. You have the last word as a woman, of course.
I think the fact that we have this discussion here sees that we need to actually pursue this fairly aggressively, because this is going to be essential if we want to finance the investments that we need. We need to channel more savings in the investment. We need therefore much more viable systems, a banking union. This is a strategic challenge for Europe. I think this is also, again, important for the narrative. When we take monetary policy cold and isolated, it doesn't respond and it doesn't resonate to the general public. But if you actually talk for what actually this money is necessary for the investment, for the future, I think it resonates more to people, but then also to assure what it will require. And I think the message also again from this forum is about recharging Europe. And recharging of Europe is not by individually, but collectively. And that will need a policy decision to get far further ahead in a more unified Europe, because quite frankly, there's more at stake. And my only suggestion is look at what is else happening, particularly in Asia and other parts in the world, and people should wake up.
Irena, you have the last word.
Thank you, Robert. I would just like to say that I fully subscribe to everything that Axel said, and I see enlargement as additional opportunity to strengthen the European Union. Looking at it from the economics perspective, I believe that it's mutually beneficial. All economic analysis have shown the contribution and the win-win which enlargement brought to the European Union during the integration of the Central European member states. And I believe that one should not neglect the possibility and potential that the market of 65 million people added to the European Union brings. And I would like you to leave with this sort of very positive sentiment that enlargement is opportunity and added value rather than a cost.
Thanks a lot. This leaves me 7 seconds to wish you all the best for the enlargement process. Hope to see you soon, both within the EU as well as at the, of course, at the ECB Council. And I think it was a great panel. Let's give them a hand.